Oh, potential game changer for cryptocurrencies as Harvard comes out and suggests that central banks should hold cryptocurrency, in particular Bitcoin. We'll talk about why in just a moment. We'll also talk about what's going on with CZ and Binance. Why can we not unwrap our wrapped Bitcoin, and what's going on with the DPEG? We had a little bit of pain over on the Cardano network, and I can't believe this, but next Wednesday, the New York Times is actually doing a deal book summit. There will be attendees like Mark Zuckerberg, President Zelensky from Ukraine, and Janet Yellen from the Treasury Department, all alongside Sam Bankman-Fried. Yeah, for some reason, the New York Times, the same organization that put together a wonderful puff piece on Sam Bankman-Fried, not at all or remotely calling him criminally negligent for the failure to ensure the safekeeping of their customers' assets, but instead promoting that he just made a mistake. To me, it all seems pretty disgusting, but let's hit some of the updates. First, it is Black Friday. That means the biggest coupon code is expiring today for the programs on Building Your Wealth. Remember, when you join, you guarantee the best price and lifetime access to the programs on Building Your Wealth, all new lectures, lifetime access to anytime I add a lecture. You lock that in, and of course, you get access to the daily course member live streams. Link down below, in the course member Elite Hustlers course for increasing your income drops all of its lectures today, and probably later this afternoon. So with that said, let's get into the updates. The biggest issue of concern today has to do with Bitcoin and wrapped Bitcoin, which is basically Bitcoin on the Ethereum network. Bitcoin right now is sitting at 16,491, but wrapped Bitcoin is sitting about $200 below that. That is a sign of a DPEG. And a lot of folks on multiple different platforms have been complaining about having issues moving their wrapped Bitcoin to Bitcoin. This is a dangerous DPEG that could be the sign of issues with underlying wrapped Bitcoin to Bitcoin liquidity. What that means is if all of a sudden some institutions, like maybe let's just say CoinList, don't have enough Bitcoin to give you, and you ask them, hey, I want to trade my wrapped Bitcoin for Bitcoin, but they don't have enough, and they can't facilitate this transaction, we start wondering if these companies have liquidity concerns, which causes a little bit more of a panic in the markets. And when markets start panicking, they start dumping the value or they start trying to dump their asset, even if it means dumping it for a discount. That's potentially what you're seeing with wrapped Bitcoin. When you see a DPEG, it means some individuals are saying, I will sell my WBTC for less than it's actually supposed to be worth, which it's supposed to be worth 1-to-1 to Bitcoin. I'll sell it for less just to get the liquidity, to get my money out. The larger that gap goes, the more panic you tend to see. But what we have today is quotes from CoinList. A lot of FUD going around that we would like to address head on. CoinList is not insolvent, illiquid, or near bankruptcy. We're just experiencing technical issues that are affecting deposit and withdrawals. This has to smell like the largest bullshit I've ever read in my life. It's almost as bad as FTX saying, we're fine, no problems with withdrawals. And then a few days later, we're freezing with withdrawals. And then a few days later, we're going bankrupt. It's the same thing BlockFi said. Literally in one day, BlockFi went from everything's fine to we have to freeze all withdrawals, it's not fine. You can't trust this. You've got to get off exchange. It's so important. Of course, CoinList says they're working on updating their internal ledger systems and that this is just purely a technical issue. Don't worry, it's by no means a liquidity crunch. Of course, it's stuff like this that is leading to companies like Binance suggesting, you know what, we will do whatever we need to do to make sure we have a recovery fund for startups. Basically being like the central bank, the Jerome Powell, so that way if companies go bust, we'll bail them out. Of course, the problem with not being a central bank is you could also run out of money. See, the old Jerome Powell of crypto was Sam Bankman-Fried, who's now Sam Bankman-Broke. Now the new one in town seems to be Binance, and this kind of shady guy CZ. Now, some people say, hey man, that's offensive to an OG. Let me put it this way. If you're hiding in Dubai, you refuse to come to the United States because you're getting investigated in the United States, the UK, Singapore, and pretty much anywhere else around the world. And when reporters show up to your offices, you tell them, oh, nobody's here because of COVID in 2022. And then you do a virtual tour and you tell people, well, I mean, it's a little sparse around here because people are working from home. Let's just say there's reason to be a little sussed out about your business operations over at Binance. But I understand the desire to be a central bank. In fact, central banks bail out banks so that way customers don't lose their assets when the banks go bust because they do stupid, risky shit. The same thing is true in crypto. That is, companies do stupid and risky stuff. The difference is you could end up having a Binance come in and be like, oh yeah, don't worry. We'll bail out FTX. Let's look at those books. Oh God, this is way worse than expected. Never mind. And then the company goes bankrupt and people lose their money. This is terrible. You can't trust the crypto exchanges. Not your keys, not your crypto. Get off exchanges. We've been saying that for years on the channel. That doesn't mean you can't use an exchange to transact and buy, but in general, get off as soon as possible. Now, CZ is offering a $2 billion now bailout fund. But when you actually look at some of the details of this bailout fund, it starts looking a little bit more shady again. When you actually look at the details, you see that CZ actually suggests, quote, we're going with a loose approach where different industry players will contribute as they wish. And then when it comes to mentioning different industry players, we get companies like Jump Crypto, Polygon Ventures, Aptos Labos, Animoca Brands, GSR, Kronos, and Booker, all of them together are making a very, very large pledge of $50 million, which is less than 2.5% of the $2 billion CZ is hoping to raise. CZ has indicated they're willing to contribute $1 billion themselves. Maybe they can raise up to $2 billion. But in my opinion, this whole industry recovery initiative is a farce. I don't believe it. First of all, it's disgusting enough that most of the money in the Seifu fund over at Binance is the Binance token. So the problem with that is if Binance has financial issues, the Binance token will go to zero very, very quickly, just like we saw the FTT token collapse. And then the value of the Seifu fund is basically worthless. And if the industry recovery initiative is also funded with Binance token, if even, then there is no industry recovery initiative if the Binance token goes down. It's scary. I would not hang my hat and certainly would not put my money on a situation like this, especially when Genesis is looking for emergency funding given their $2.8 billion in debt, reportedly trying to raise at least $1 billion just to survive. Now, as we talked about in my last video, I don't expect that the Grayscale Bitcoin Trust will be going bankrupt. I actually think there's potentially an opportunity to buy the Grayscale Bitcoin Trust, unless, of course, you think Bitcoin's going to drop even more. The discount for net asset value is pretty nice, looking at about a 40 to 45% discount from net asset value because of liquidity constraints. Now, on the flip side, though, it could also be a warning sign that what if crypto prices are going to trend down even more because there ends up being a larger bankruptcy. If Genesis goes, what if they end up taking down another brokerage? What if 10 other brokerages go down and they end up taking down Binance? The Binance token goes down. Well, then Bitcoin might not be at 16,000 anymore. It might be at 8 or 4 or 2,000. And so that's potentially what the Binance token is starting to warn us of, is that if we see a 45% decline in Bitcoin prices, we might be under 10K. Now, the good news, though, is it's not all bad news. In fact, Belgium just announced that they believe that Bitcoin and Ethereum are not securities, which is actually very huge. See, they argue that any issued cryptocurrency backed or created solely by computer code are not securities. This is a big deal because there's been a lot of rumor around what the SEC is going to declare a security or not. Right now, it's the opinion of Gary Gensler, the chairperson of the SEC, not an official opinion, that BTC is not a security, but that Ethereum could be a security because staking could be deemed like a lending service, and potentially you're worried about the common enterprise concern of Lido, for example, holding over 30% control over Ethereum because so many people have staked Ethereum 1.0 before the merge with Lido. However, this news from Belgium is a really interesting argument that basically something is a security if it's issued by an individual or an entity, like maybe the FTT token or the BNB token, but not BTC or Ethereum, according to Belgium, because they are not issued by an individual or an entity. That potentially suggests these coins would be more of part of the public domain, which is actually good. We don't want them to be considered securities. Now look at this though, hedging sanctions risk, cryptocurrency and central bank reserves. A paper put together by Matthew F. over at the Department of Economics at Harvard University published just a few days ago. Central banks may consider holding more assets in cryptocurrency, specifically Bitcoin, as a way to hedge the risk of US sanctions. Consider, for example, when Russia was sanctioned, which is the 11th largest economy in the world, and these sanctions have never been seen before on this sort of scale. Russia had potentially lost about half of their international reserves due to sanctions being freezing their assets. Had they had some diversified risk into, let's say, Bitcoin, maybe you could actually call Bitcoin a safe haven asset, which you might say that fiat currency and US treasuries are no longer a safe haven asset, especially if you're a country like North Korea, Russia, or Iran. Countries that might be interested in actually holding Bitcoin along with gold to diversify away from the risk of being able to be controlled by the United States. They also talk about how there is obviously some risk in holding Bitcoin due to price volatility, but that could potentially be diversified away. And in addition to this, as long as fiat does not, or central banks don't actually control the blockchain, there are a lot of opportunities to transact both on-chain and off-chain. In fact, there's a piece here by Luckner, Reinhardt, and Rogoff. I thought this one was very, very interesting. They talk about how there are peer-to-peer transfer networks like localbitcoins.com that allows you to essentially conduct transactions off-chain that end up getting bundled together in on-chain transactions, but are actually off-chain transactions. And through these methods, you're able to transact and kind of conceal some of the activity that you're performing potentially off-chain, which could be kind of useful maybe for entities like central banks who aren't interested in seeing all of their transactions monitored, which is kind of interesting because you'd think central banks should be transparent, but then they could also, as this paper argues, receive a lot of scrutiny for where they're parking their reserves or what they're doing with them. They also make the argument that you have to be careful of other coins, like, for example, Axie Infinity, because Axie, for example, and the $600 million worth of Ether that were stolen from the Axie Infinity hack ended up having the US Treasury Department sanction the digital wallet used in the hack, which shows you that if the Treasury Department has that kind of control, it's not as decentralized as it should be. Again, leading to the potential that Bitcoin might be the most hack-resistant, secure, and decentralized tool, even above the proof-of-stake system that Ethereum now uses. And even though it'd be very expensive and difficult to take control of that Ethereum network, or to have any kind of controlling essentially power within the Ethereum network, you'd have to spend a whole substantial sum of money. As they say here, half of Ethereum's market cap is about $92 billion. But in theory, a country could take control of half and then institute a hard fork and have a lot more control over Ethereum, although it would be expensive, than they would have control over the very decentralized Bitcoin network. Kind of an interesting piece here by Harvard, honestly. And they wrap up by saying, hey, you know what? This is a real consideration in the face of sanctions that central banks diversify not only amongst gold, but also crypto. And while gold is great and universally accepted, it's really difficult to buy and store in its physical capacity. It's heavy to ship around and deal with, and it's easy to lose. And it's a lot less liquid than cryptocurrencies, which can obviously be transferred over the blockchain pretty dang quickly and inexpensively. Another risk, though, to this idea of using cryptocurrency as a reserve is the potential rise of the renminbi, the Chinese currency, as a currency reserve asset. Reason for this is the renminbi is pegged to the US dollar, so some countries might actually use the renminbi as a proxy to the dollar, even though there can be fluctuations in that peg. But countries like Russia might suggest or feel safer investing in the Chinese currency than they potentially might investing in dollar-backed assets like treasuries. Fascinating. What's also interesting is Cardano's stablecoin attempt, Ardana, which was going to be labeled DUST, is apparently shutting down. Not enough money to keep the project going. Some complaining that the Cardano network is just too complicated to code on, although Charles Hoskinson obviously is vigorously defending the Cardano network, suggesting he lost about $500,000 on the Ardana project, and is still hopeful for stablecoins to come to Cardano. And that covers it. That's our news for today. Check out those programs on Building Your Wealth and the 60% off coupon code. Thanks for watching, and we'll see you in the next one. Subscribe if you want more content like this. Thanks. Goodbye.